Hello, my name is Yoojeong, and I would like to share an update on the abrdn Asian Income Fund, which aims to invest in the most compelling and sustainable dividend stories across Asia to support both long-term capital and income growth. During a challenging year for Asia, the abrdn Asian Income Fund delivered positive absolute NAV or net asset value growth ahead of the benchmark MSCI Asia Pacific ex-Japan Index. Following the recent full-year dividend announcement, the fund's dividend yield is 6%, which is double the yield of the benchmark. The fund benefited in particular from having a low weight in China. The much-anticipated China recovery didn't materialize in 2023, and the internet stocks in particular were weak due to slower growth expectations and higher competition. As you may already know, this fund has limited exposure to Chinese internet companies, as they are not yield companies. On the flip side, we're a little lighter on India exposure, as this is not known as a dividend market historically, which cost us a little bit last year, as Indian equities were one of the strongest markets globally. We do, however, selectively own companies in India with good yield. One such example is Power Grid of India, which runs the domestic transmission network. This has been one of the best performing stocks in the portfolio last year and continues to pay an above benchmark yield. Contrary to popular belief, Asia is a rich hunting ground for dividends. Over the past 2 decades, more than half of total returns in the MSCI Asia Pacific ex-Japan region can be attributed to dividends. Companies that pay dividends are also well diversified across Asian countries, as well as through different industries. And we're able to find good quality companies in a broad range of sectors that include the traditional yield companies, such as banks and real estate, as well as growth thematics, such as electric vehicles, generative AI, and renewable energies. For example, the Taiwanese technology supply chain companies have enjoyed a strong year thanks to artificial intelligence and server-based demand growth. Having 40 analysts and fund managers on the ground here in Asia and a quality-focused investment process really shone during what was quite a turbulent year. This fund has 20% of net asset value invested in small companies, which are those companies that have a market capitalization of less than $2.5 billion, an attractive part of the market that represents what will potentially be the winners of tomorrow. We own companies like Sunon Wealth and Taiwan Union, both small cap companies in Taiwan that are exposed to structural growth trends in leading edge technology, with strong balance sheets and sustainable dividend policies. Thanks to these bottom-up stock selections we have made, we're pleased to be able to increase the dividends paid to fund investors. The fund has announced a final dividend for the 4th quarter that amounts to 4.25 pence, a notable increase from the 3.1 pence paid for the same period the previous year. This brings a total dividend to 11.75 pence, up 17.5% from last year, and a dividend yield of 6%. Which is expected to be a covered dividend payment and will represent the 15th consecutive year of dividend increase, keeping the fund status as a next-generation dividend hero, as recognized by the AIC. And we hope that our focus on quality companies in Asia, with strong business moats, balance sheets, and cash flow generation, will continue to add to the fund's dividend growth track record going forwards. Thank you very much for your time and interest today.